Let me ask you, my friend, I'm curious what you make of some of the financial incentives that have been thrown out there. Connell touched on a few of them, the interest rate cuts, you know, the money in the banking system to make sure, you know, it greases everything so that we don't have a repeat of what happened in the meltdown. But if you're sort of, you know, hunkering down in your home and not inclined to go out because you're afraid of catching this virus, will some extra money made available to you change that? What do you think?
Well, we have to remind ourselves that the economy is almost 70% driven by consumer sentiment and consumer action.
Right.
I do think that a lot of folks who have initially poo-pooed the idea of a payroll tax cut haven't considered the possibility that it be a payroll tax cut at a ceiling of, let's say, $75,000 or $85,000, so that it goes to the people most in need of cash flow at this point in time. And you know, I picked those numbers arbitrarily, Neil. I just think we've got to look at everything we can possibly do to incent the consumer not to go into a cave. Let's remember one thing: this is America. We're going to get over this. A year from now, the comps, because we're going to have two very tough quarters, but the earning comps a year from now are going to look pretty good. The market has been incentivized by low and zero interest rates. I believe that will restore calm to trading, and things will be, look, Neil, look at what happened after 1987. Look at what happened after 2001. Look at what happened after 2009. America always comes back. The market.
I have no doubt about that. I'm not meaning to second guess you, Dick. I am wondering, though, that some of the things that are being proposed, would they have the impact that people hope if they are actually being told by the CDC and NIH and all these other medical groups, stay in your home, you know, hunker down. They're not doing it out of just, you know, being alarmists. They're being told to do that. They're being told to avoid, right now in the case of crowds, anything more than 50 people. That kind of rules out pretty much everywhere. So I'm just wondering if whatever incentives you throw their way, if they're going to make a difference. I understand what you're saying down the road. They, in fact, will do just that, and they might. But in the meantime, markets are trading more on the course of this virus than they are on the course of that economic help, right?
Well, look at the short-term behavioral change on the part of consumers in America. Over the last 5 years, look at the enormous growth in online shopping, whether it's, you know, through retailers, whether it's in the food industry. What you're going to see is a spike in that, Neil. And the way it will spike is by putting cash in the pockets of people who most need it. And I think that, you know, this is true, a period of lack of information. There's fear, there's uncertainty, but there is also the need to eat. There is the need to provide basic goods and services to our families, and that will continue. It perhaps shifts from consumer, if you will, interaction to consumer online action. So I don't see it as negative as most people do.
Good. Then let me ask you about the market, and we talked about from the height in the Dow Jones Industrials, for example, to our worst levels this morning before the circuit breakers kicked in. We were down 31% from our highs, and those were reached a little more than a month ago. Is that too much to you?
Well, Neil, let's just amend that observation. We're down at the peak, at the bottom this morning, 31%, not from the recent highs, but from an all-time high. The market is at an all-time high. And I think that people have got to remember when this president was elected, it was under 17,000 on the Dow.
Well, we're back to levels. We're back to levels we were at about 3 years ago.
Right. And, you know, is that disastrous? To some people who might sell based on fear or panic, yes, it will be, Neil. But remember one thing. You don't make money in the market. You don't lose money in the market until you say sold, okay? And for people out there who don't know what to do at this point, talk to your financial advisor. If you're a do-it-yourself investor and you don't know what to do, the answer is do nothing.
Very wise and very calming words, and you were certainly that and much more. through a number of crises that were experienced at the corner of Wall and Broad. Always good to have you, my friend. Dick
Neil,
Grasso,
always good to be with you.
the former head of the New York Stock Exchange.